Fellow traders, 'tis I, TheRumpledOne, coming to you on Tuesday, November the 11th, Veterans Day. The year's 2025. Let's talk trading. Noise. These videos are for educational purposes only. Your results may differ from mine. As always, let's have our risk management in place so we don't lose more than we are willing to lose on a single trade or during a single trading session. Noise. I'm wondering how many of you read that book, Signal in the Noise. It's been out for a while, but the reason I'm bringing it up today is because when we're trading, most of the time, we're focused on a signal of some sort. We might be looking at candle colors. We might be looking at horizontal lines when the price hits that line. We might be looking at squigglies like indicator 2. And what happens is we are looking for these signals. But the thing is, what if it's noise? Now, I think I talked about listening to a Warren Buffett do one of his board of director addresses or stockholder meeting addresses. And he was talking about the noise of day-to-day fluctuations because, he's in it, he's looking at decades. He's not looking at years or months or weeks. To him, all of that is noise. So, one person's signal is another person's noise. But, he's an investor and he has a whole different approach than we do as traders. Even though the goal is the same, make money. The goal is the same, buy low, sell high, or buy, sell higher, sell, buy lower. I mean, those are kind of the goals that we shoot for as traders. So the question is, if you've got your trading plan written down and thought out, you're looking for certain signals. But the thing is, when you're looking for something and then you find it, the question is there something that you're not seeing, not considering, that tells you, no, don't do that? For example, right here, we had a signal to go long. We went and hit that flip-flop box. And we're near a bottom right here. We're near a relative low. You see, we're still above this low. But the thing is, I wouldn't have taken that trade. It's like, no way. Because I'm looking at other things. I'm looking at all this red, this right here. This is the current M30. It's red. And it's already done a cover here. Covered this one. And let's see, this one's already been covered. This one hadn't been covered, so it covered 2. So a lot of down push. And the other thing is these indicator 2s are pretty much both pointing south. So it's like, no, let's wait. Let's wait. Because you can see here on this one, this indicator 2 was pointing up right here. It closed above it. It's pointing up. And then you could have ridden that nicely. In fact, right before the video, I was in a short and I punched out right here. Yeah. They brought out another pot of shrimp, another 5 or 6 pips. But I wanted to make the video, so I said, you know what? I don't want to be in a trade and have my attention split. So, signal noise. And the thing is, we're usually only looking for signals to confirm a bias or a trade direction. You know how I don't like to say trend. And so what happens with me is I'm looking at the chart and I'm thinking, oh, I want to go long. So I start looking for things to confirm going long. But I'm actually making a mistake when I do that. What I need to be looking at is what's the signal telling me? Is the signal telling me short or long? We go here and we look at, simple price action chart. In fact, let's bring it up to 1 hour. Why did I want to go short? Well, this is a return bar. It's huge. Right there. I think price needs to get back there. Maybe not today, but sometime. Like, had this big return bar here, this big bar. That's what I call a return bar. And what the heck just happened there? And you can see here we got back to that open. Right there. It came back. You see, there was this big bar a couple days ago, and what happened? We're right back to the open. And you see this big negative bar or bear bar there. What happened? Back to the open. And then yesterday, if you'll recall, there was an open gap somewhere around here at 85. And I said, you know what? I'm looking for price to get back there. Well, guess what? Almost got back there. Close enough, but it almost got back there. In fact, let's see, what was this? This was 84.9. I think it was 85.3. And here we have an 84.6. So it was close. Close enough that you could have made, depending on where you got in. If you got in down here at the launch pad, you could have made about 40 pips. So, was that signal or was that noise? Think about it. You had that open gap, and open gaps usually fill. Might take it a while. But the thing is, it doesn't have to fill for you to be profitable. You just have to find your signal where to enter. So you can see here, there was an opportunity to enter here if you wanted to go against the candle color. But if you were going with it, and there was an opportunity to take a little profit. So, and what you have to realize, this is trading. Sometimes you get signals, call them false positives if you like, but you get the signal and you take the trade and then it goes against you. And that's why you have your stop loss. Because you have to understand, you're not going to win them all. And depending on where you have your stop loss, you might be in the trade for a while, you might be out really quick. Let's just drop this down to M30 and take a look at what's happening. Pretty much the same thing, since this is the second 15 minutes of the 30-minute of the hour here. So we drop down to M15. So right here, there's a return bar. What's this? That looks like a return bar. What's this? That looks like a return bar. So you can see here, price returned. And this is sitting right on the psychological 50. Right now, we're closer to 75 than we are to 50. So we'll have to see what happens. And notice here we crossed that daily open. Once again, nice trade. You know, looking for these signals. You see right here, we crossed that weekly open, shot up, crossed it here, shot down. So once again, you know, signal or noise. Right here, see, I just noticed we had a signal here. We had a flip-flop box, closed above indicator 2, but below M5 indicator 2, but M1 indicator 2. Could have entered that trade. And a little drawdown, but now a nice move. Could have picked up 3 pips. Hits that indicator 2 on M5, which if you enter in between, then usually it'll come back to indicator 2 here, and that's where you want to just go ahead and take your profit. Because what you want to do is if you get in the trade and it's above both indicator 2 from M1 and M5, that's when you want to stick the trade. So for example, you know, right here when it closed above that M5 line, there's a nice move. Right here, it closed below it. There's the nice move. So, but for me, that's just one of the signals I look for. Plus, the other thing, you know, I was going short. Why? Because we were in the rat zone. And I saw price made a new high for the day, and I was just chomping at the bit. In fact, where did I get short? I got short at 79.3. I kept thinking I should get short at 80, but I didn't because I was waiting for the signal. And that's why right here, see, I wanted to get short at 80, but I was waiting for the signal. And I rode that down to 66.9, so down to this level. And so you can see here, price hit it, but now it's reversed. Got a signal to the downside. But you can see here, you know, indicator 2 was pointing up, but might want to rejoin the push to the downside. You've got M30 red, and remember, you got these big return bars looking for the 50. So it might hit it, it might not. I don't know, but that's trading. So what you have to do is, once again, you determine what your signals are. What you have to determine is that particular signal now noise because of other factors. And the thing is, you can talk yourself out of trades just as well as you can talk yourself into trades. So you have to be aware of that. And as always, you can't be greedy. And so, you know, one time here, that was worth about 3 pips, if I remember. And this one was worth 12 or so. And you just have to read the market, read the charts, and trade accordingly. Because, as always, it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is the Rumpled One, over and out.